Hello, everybody, and welcome, as always, to TradeGate Hub's morning market update. Of course, I am your host, Eliman Dambell, and thank you for joining us this Wednesday, essentially, where we are going to go over some of the events which have happened over the last 24 hours, but also previewing some of the opportunities which could be happening today. Today is an absolutely incredible day as far as content on TradeGate Hub. We do have somewhat of a full house, of course, starting off with myself laying the table for the likes of course, Dale, Mike V later on, but we have a special guest, Jack Swagger, of course, author of Market Wizards, who will be coming live 1 p.m. Eastern later on. So for those of you who are essentially watching this, please do look forward to that session, which I will, of course, be locked into as well. But as far as being locked in, guys, please, of course, before we do start the session, pay attention to the description where you will find a risk warning in relation to this particular webinar. Now, again, it's been, I don't know, 2 days since our last session. Of course, we had the update last on Monday. And one of the main markets we were looking towards, of course, was gold. And there's no better place to start off because some of the moves in which we were anticipating have already happened. Guys, if you remember looking at gold on Monday, prior to the release of course, consumer confidence figures, we saw some consolidation. We said we saw the short-term potential for gold to rise towards the 1700 areas before potentially entering the frame where we have seen some historical sell-off. Of course, if you pay attention to TradeGate Hub yesterday, you would see the likes of commodity analysts such as Mohammed Shakir there, typing his own views on gold, and quite a few others have been contributing on TradeGate Hub platform as far as their own analysis on gold, and a lot of people have kind of had similar views in a sense. But the view I had, of course, the view we went through there on Wednesday, I beg your pardon, on Monday, was the fact that we believed gold prices could potentially rise a bit more depending on that CB consumer confidence report. Of course, we saw the number come in 117, which of course was just a bit lower than expected. It was expected to come in at 119. So the easing of consumer confidence there in the US essentially has impacted the strength of the dollar. Hence, we see the price of gold go up. Now, the price of gold has gone up, but look at where it has stopped. Look at where the RSI has stopped. 77. There you can see 78 was that resistance there with the RSI. We're pretty much there historically, as we said earlier on. We are expecting. Just look at where we are. Just look at where we are. Most indications do tell us that this is home to a lot of bears. That this is, I don't know, bear territory. And there are some, I don't know. There's some huge bears, some huge bears on the table. There's some huge bearish action, the likes of these moves, the likes of these, the likes of these, the likes of. So the last 4 or 5 times, probably more, that we've seen gold prices trade around this area, we haven't seen huge sell-off. And of course, this is the highest gold prices have been pretty much since early January. So the signs are that there could be potential sell-off, especially when you're looking at a daily time frame. But let's actually go intraday, looking at, let's say, 4 hour to start with. And even with a 4 hour, you do see, yes, the markets have been rising, but they have been doing so relatively cautiously. You are seeing somewhat of an equidistant channel, that consolidation still forming whilst it is rising. So the question is, especially if you're looking at a 4 hour time frame, here you do have the potential for it to go up a bit higher as far as the RSI potentially heading towards 78. And even if that does happen, it's heading right to the area where we initially believed prices could be before a potential fall, which is around 18. I beg your pardon, 19, 16. So 1916, 1917, as you can see there. So could we see gold prices head to that if this RSI level is able to just continue? But I think above this, you'll be very hard pressed to find anyone who will still be in the game. If there are any bulls, you may just see them start to cash in. Now, to be honest, you already are seeing the bulls cash in. You saw the initial bulls there. They probably would have cashed in at that top level there. The markets continue to rise again with consolidation. You saw that second batch, but you can see the depth of those candlesticks are starting to slow, meaning, of course, some of those bulls, the initial bulls anyway, are leaving the fray, leaving the ruckus as they do see potential. Just imagine, I don't know, walking into a bar, you see a bunch of bulls walking into a bar. I don't know, somewhat taking advantage of the smaller bears. Then they do see quite a few mama bears, the likes that we read about in different stories and stuff like that. And essentially, the second that they see the size of these bears, they say, okay, this is a fight we just do not want. It's time to leave and somewhat protect ourselves. So I think that's what we're seeing happening in a sense with gold. I think the bulls which have been in the room probably want no business to do with these types of bears. So you are going to see some closed positions, and the ones who stay, you may see a false breakout. You may see some bears, some bulls with a sense of optimism, hoping that this will continue further. But I think the further you go, the more you risk being absolutely torn up by some of the bears which do exist a bit later on. But it's an interesting one. It's an interesting one to pay attention to. Fundamentally, towards the rest of the week, we do have some more news coming out of the US. Of course, durable goods orders coming out, consumer sentiment coming out there on Friday as well. As far as today, what do we have coming out today? Let me just quickly go on the economic calendar. And today, not much from the US. You had interest rate decisions, of course, from New Zealand earlier on coming in, as is the press conference followed. We have GDP numbers out of Mexico in the next few hours as well. Tomorrow you have durable goods and GDP numbers coming out of the US. So what you could see today essentially is that consolidation, is those bears waiting for the news tomorrow. Those bulls and bears waiting for the news tomorrow, and depending which side of the fence it swings on, you may see the move happening. So far so good as far as what we expected of gold. Slight rise, the rise has happened. Now it's time to see, because I think everyone can clearly see here the real opportunity would be in the rise, in the fall. The real if you are able to be on the same side of the fence as those bearish candles, and not to say it's going to fall from where we are now. That's a $70-$80 fall. So we're not saying it's going to happen in one fell swoop, but due to the fact that it has happened quite a lot of times, does give credence to the fact that it could happen again. And if you are in that position where you are, of course, able to capitalize on the potential outcome, if that potential turns actual, and you are in that side of things, I think it's very, very fair to say you will be in the money, so to speak. So that's gold, a great one to start off with. But now moving on, but sticking somewhat in a similar trajectory, looking at S&P 500 again on Monday, looking at the S&P. We saw the potential, and of course you saw the markets rising ever closer to that all-time high. And again, no ifs, ands, buts, or maybes. We have said we believe that ATH will be reached. Of course, yesterday with gold prices increasing as much as they did due to easing consumer confidence, we did see somewhat of a sell-off there in the S&P 500. But the overall momentum over the last week, I'd say, is still bullish. You are seeing the market still climbing towards that high, especially with the SPX now. This is the future, so we are seeing pre-market prices at the moment. But generally speaking, I will say, especially look at that 10, just zooming out, look at that 10 moving average, that 10-day moving average. The momentum is really starting to pick up from a bullish perspective. If it is able to cross over that 25, I think it's just a matter of time until it does. I think that will definitely solidify that bullish push. As far as the bullish push, look at where we are. We're at 57 RSI. And the level of 57 as well, to a degree, has been at least on more than one occasion anyway, has acted as some form of resistance. So we'll be interested to see if it can, especially 59. If it's able to breach 59, then I think that will probably be the catalyst for that ATH. Because look at where we are now, just around there. So clearly a resistance. So it has to break that resistance there before it can make its way to that ATH. But guys, we're literally I don't want to say a stone throw away, but we're pretty close. We're pretty close, and I think it will be close enough to get us there. Hopefully even by tomorrow, depending again on those durable goods orders, which do come out from the US. So do pay attention there. And again, especially when it comes to the equity side of things, you have absolutely legends. Coach Del P, of course, Mike V, absolutely stout analyst, elite analyst, and you're going to have another extremely elite analyst and market commentator, author later on this afternoon, Jack Swagger. So do pay attention to that session as well. Again, I'll be locked in. I'm sure we all will be as we're watching, I don't know, like a cup final or something like this. So it's going to be a huge session, huge day on TGH. So I'm sure a lot of you will be plugged in throughout the day. Now, moving onwards, again, sticking with that theme, we've looked at gold, we've looked at S&P 500. We do want to look at the dollar from a currency perspective now as well. So just quickly bringing up cable, GBP USD. Now, my view on this from Monday, has somewhat changed, and I hate. Let's look at it. It's probably going to be the only time I do this, guys. But in these sessions, I really hate looking at the weekly timeframes and timeframes above 1 day. But I just want to show you a different perspective. Of course, if you remember, and to a degree, what we said on Monday is still relevant. We are seeing that resistance held at 2 and a month, probably 3 month resistance held again. The markets haven't breached that point since February. Of course, we're pretty much I don't know, a week away from June. Now we see the consolidation again. Are we looking at the full? So that was what we were expecting there on Monday, and so far that does still hold credence. Look at where the RSI is. It is down to 60. 60 has given us some bounces before, especially if you look at that level there. So look at that level there. So there has been some bounces formulated from the 60 level to tell us that absolutely this could go upwards, but all other indications are pointing downwards from moving averages to historical selling at that same area there as well. They're all pointing downwards. Now, if we quickly move on to a weekly, was it a weekly or monthly? I was looking at this yesterday. Let's say monthly. Let's look at a monthly. Now, from a monthly perspective, guys, you can see not since 2018 has the markets reached, let's say, 143, 144. And if you look, sometimes you see a market which comes too, it was the same, I call this with the S&P, where it just came too close to 4,000. Like a few months ago, I was saying it's just too close to 4,000 for it not to go ahead and break that level. Sometimes it's just a matter of common sense. But from a technical perspective, let's actually paint the picture and see. So it's been a while since we've seen the moving averages break that level of 60. Currently at 64, we haven't seen that since 2014. 7 years. So we haven't seen the markets break out on a monthly time frame, break out of 60 in 7 years. But again, in the last 3 years, the highest it's gone to was 144. Look at the moving averages. Yeah, you have that crossover, but pay attention to the 25 EMA there, or the 25 EMA there. Is that going to be enough to cross over that 50? And if it does, can we be heading to that area there? Is that an area we're potentially heading to? Above there, again, it's very, very unlikely we're going to see it past that point, because again, from a volume perspective, look at the RSI. In damn near 30 years or so, we haven't seen it really break that level just once or twice. So it's very unlikely, but it's the first time in 8 years or 7 years it's moved out of that level. So that alone needs to, I don't know, give us a different outlook in the long term. I would not be surprised. So this is very, very long term monthly time frame there. Shorter term time frame, I still believe you may even have that fall in which we talked about earlier in the week and even today. As far as that resistance being held and potentially going back down to 139. But the reason this level of 60 is so important is, yes, we have seen bounces there before. If it is able to bounce from the 60 level and not break out below and get into the 50s, could this bounce be the catalyst for the move towards 144? Because I do believe there is a move to 144. I just see it happening. I just see it potentially being on the cards. And of course, if that is on the cards, I think we will be looking at the cable rate hitting its highest since 2018. So that's my view there on cable. Still somewhat bearish in the shorter term. Those indications are, of course, somewhat being realized. But I think, as always, and I really hate to paint those longer term pictures, especially on an intraday session, but I think it's just something for you guys to consider in back of your mind. Moving on with Bitcoin. Again, of course, we have I received quite a lot of messages from Bitcoiners, likes of Kafor and a few others on when was it, on Monday, saying why don't give us your condolences just yet, we're still in the game. And so far, so it does seem like it. It does seem like my condolences for Bitcoiners may have been premature in a sense. You see BTC USD back above 40K. I think it was. You can use condolences. You can use the phrase, term caution, because even though we are at 40K, you can just see the markets have just literally breached 40K and come back down. Guys, you see uncertainty. For me, it wasn't about winning or losing. It's about, of course, it is about winning and losing, but it's about how would I phrase this? It's not about optimism or pessimism. It's about realism, guys. It's simply a case of realism. Not being overly optimistic, not being overly pessimistic, not being bullish or bearish, but being realistic. And in being realistic, even now, guys, you can see the markets have breached 40K, absolutely. But look at the high it reached. It's coming back down already. Why? Because clearly this is an area of consolidation. 33 to 41 at a K clearly is a support and resistance, which is being created after that sell-off which took place earlier on in the month. So you buying there at the floor, absolutely. Now you're probably back in the money to a degree. If you bought at that low, you are absolutely in the money. But the question is now the time for it to break out? This is the uncertainty you have to deal with now. You see what I mean? Because now you're asking yourself the question. You probably see the markets rise there again. You're like, yep, it's going to go up. But then you start to see it fall down. You look at the RSI. It's currently somewhat at a resistance. It looks like it may be overbought. Is this time to sell? You look at those bearish activity, those bearish candlesticks, and you're starting to question, should I hold this position? Now you see you have a lot of things on your mind. You aren't sure which way to go. If you haven't taken, if you are still in the game. For me, Bitcoin this year, actually, no, I don't against my personal trades, but I think generally what you want to be realistic, guys. You want to be realistic. If we're looking at this from this new set of, a new pair of eyes, doing the analysis for the first time, looking at this, I'm sure the majority of us will be looking at a bearish opportunity. The majority of us will be looking at a bearish opportunity depending on what happens with the RSI at 57. depending on what happens there, we would probably be bearish. If it doesn't break out, 56, I beg you, 56, 57, whatever. If it breaks out, maybe we would probably be a bit more optimistic. But as long as it remains there, we probably would be cautious and waiting for that potential sell-off, which we have seen quite recently in the last even 4 or 5 days, 4-hour time frame. So this is all I'm saying. What you don't want now is your emotions to get the better of you, to start making decisions based on fear and misguided. I don't have a synonym for it, so I'm not going to use the word again. Emotions, misguided emotions. So do pay attention. Do be cautious. Do be cautious. So I'm not going to give you my condolences today. I will essentially say approach with caution, and hopefully my condolences are needed when we get back on Friday. Okay, so moving on, we probably have time for 1 or 2 more. I do want to look at another currency. Why actually? Let's switch up. Let's switch it up a bit. Let's look at. Of course, we knew we had the rate decision from Australia in the press conference earlier on. So I'll finish with that. Let me quickly look at crude oil before then. Again, probably at this stage of crude oil with the analysis, I think every session, every 2 days, we're either at the floor or the resistance. Remember when we were the floor a few days ago? I beg your pardon, we were heading towards the resistance. Now we are at the resistance. We're seeing these dojis of uncertainty, moving averages, but there's not much to talk about here. There's not much to talk about with crude oil, guys. There's not much to talk about here. Other than I think it's pretty obvious what it's set up for, and it's pretty obvious what people are waiting to see what happens with the RSI. But again, it's set up fairly bearish. I wouldn't be surprised if we're seeing this back at the floor, even by Friday, or at least towards the mid-60s. It's already mid-60s, probably low 60s, probably 63 or so by Friday. But let's just finish up the session. I'm not going to look at any other indices. I think the S&P was enough for today. Let's just end on a currency. And whew, boy, oh boy. And guys, again, with these sessions, what I always say is, we want to try and have not only look at the main, of course, the markets that we look at the moment are probably the most traded. But on days like today, especially with the news coming out of New Zealand, of course, the DAX yesterday as well, recording a new high. But some days, what I'm going to try and do more, and I absolutely need your help with this, guys. Get on TGH, type away. What do you want to look at today? I am looking at your messages. I am plugged in, so it will be absolutely great to see which markets you're trading or your clients are trading that you would want us to analyze, because this was a great opportunity. Just look at this move in Aussie Kiwi. Whew. Look at this move. Absolutely lovely. Just broke out of that 107 area to that secondary floor there. Lovely move. What an absolutely oh my God. How were we not able to look at this beforehand? Because if we did, guys, this was one of these moves you could just obviously see coming. Look at the RSI there. That was clearly the floor of 39. The opportunity for it to break out in again, similar to what we were saying in gold, you do see quite a lot of those bears with their historic. This was an easy move, to be honest. This was a very, very easy move to spot. I'm probably upset at myself that I wasn't involved in a move like this. For anyone who was, absolute kudos to you. Great move, great move. But now what we're not going to do, guys, what we're not going to do is say, okay, we've missed that opportunity. You can see the markets are headed to, it's broke out of one floor. Now it's essentially touched another. Yes, you've seen those bounce backs there, but we're not going to do that, guys. We're not going to look immediately for the reversal. You have seen it before. We have seen it before. But just because we've seen it before doesn't mean it's automatically going to happen again. Yes, there may be a route back to 108, but it does not mean it's going to happen in one fell swoop. I would say do pay attention to the potential for that, but also be cautious of some concern. This was the move. Sometimes you miss a move and you try and force another one, but I think this was a great move there on Aussie Q. And essentially, I just brought this up, even though we've missed a move. There could be others, but just to say, guys, have a look around, see what's on the economic calendar, see on TradeGate Hub's economic calendar what's happening, some of the news throughout the day, and so on and so forth. But again, I have to keep plugging this because it's going to be historic as far as TradeGate Hub. I wouldn't be surprised if the platform crashes with the amount of people who are going to be online later on. Jack Swagger is going to be on 1 p.m. Eastern time, so please do your best to attend. It's going to be a hugely educating session for all of us. Highly interesting, speaking there with the coach himself, Del P. So do have a look at that session. I'll be back on Friday. Any issues until then, of course, find me on TGH Eliman Dambell. So guys, absolute pleasure. Enjoy your day. Happy hunting, to steal the quote from your man Del P. And I will see you on Friday. Take care. Bye-bye.